And here are the three things that you need to know this morning. President Biden is in Europe this morning. Specifically, he is in Brussels for three summits, one with NATO, one with G7 leaders, and one with European leaders. You see him there with sort of a meet and greet. The main topic will be discussing next steps in supporting Ukraine amidst the Russian invasion. And President Biden also on a larger level is looking to continue to reset the relationship between the U.S. and Europe that had, of course, been damaged by President Trump. Ironically, of course, the Russian invasion of Ukraine has seemed to solidify that relationship. NATO officials have been giving updates on the toll for Russia from this conflict, including what they say is a death toll of 7,000 to 15,000 Russian soldiers. The G7 in its statement also plans to warn Vladimir Putin against using chemical or biological weapons, and they also plan to threaten the use of further sanctions. So we're watching all of these developments. Remember, yesterday, Putin demanded that European countries who are buying energy still from Russia pay in rubles. We did see a little bit of pushback against that from the likes of Italy, among others. But we are seeing, Brian Sazi, a little bit of relief continue in the oil patch this morning. You know, what was sort of a straight upward line for a lot of this year thus far has gotten a little bit choppier in recent days.
A little choppier, Julie, but Wall Street is still concerned about the impact of sustained high oil prices and energy prices more broadly and what that might mean to the U.S. economy. Interesting note out of Jan Hatzius. He's the chief economist over at Goldman Sachs this morning, saying should oil prices surge to $200 a barrel, he thinks that can cause a, quote, income shock similar in magnitude to those seen back in 1974 and 1979, and perhaps that income shock would push the U.S. economy into recession. I think, of course, it's no surprise if you hit $200 oil, consumer spending is likely to pull back, and the economy is probably headed into a tailspin. But you did flag something at the bottom of his note, Julie, that perhaps it's worth paying even more attention to. Hatzius noting that recession risk, he's more concerned about recession risk from an overheating labor market rather than higher energy prices here. He does point the probability of a recession at 20% to 35%. That's what he had been looking for, but still not exactly a positive way to start your day if you read these Goldman notes.